We have good dynamics in the labour market, and wages are going to pick up even further as we go forward. Kathy Bostjancic, Oxford Economics. China's MBS manufacturing PMI rose to 51.2 in October. This is the highest figure in 2 years. Do you think this is an accurate representation of the current state of China's economy, and do you foresee it continuing to strengthen?
Well, we did, based on recent economic data, including the third quarter GDP estimate, revise up slightly our forecast for 2016. We now see Chinese real GDP growth expanding at 6.7%, up from 6.6%. So very modest upward revision. But I think just as importantly, we see that there are downward pressures on growth and vulnerabilities underlying the economy. Most notably, what we're wondering about and concerned about is that the continued buildup in credit. And if Chinese authorities want to rein in credit growth to be a more sustainable pace, what would that mean for growth going forward? Most likely it would mean slower growth. So I think it remains to be seen on how the authorities deal with that issue.
It's been good news for the sterling this week, with indications of a softening Brexit. With the euro-pound standing at 0.88, is the sterling optimism a surprise to the markets?
It may be a surprise, just like the ruling was a bit of a surprise. I think that we'll wait to see how that plays out in terms of, that's going to have a huge impact, the politics of this and the court decision on exchange rates and just overall sentiment. One thing that I would say is quite notable in terms of the exchange rate, the fact that it slid so much, even if we've seen some stabilization recently, it means that inflation is going to pick up in the UK, at least temporarily. And in part, that's why we saw the Bank of England yesterday back away from its promise to cut rates one more time this year.
We had 2 big data releases from the US today. We have seen the unemployment rate drop slightly to 4.9%, and the balance of trade has narrowed. What do you think this tells us about the current state of the US economy?
I think it rather confirms our view that the U.S. economy remains on rather solid footing. Growth still, though, is kind of moderate. It's not extremely strong, nor is it very weak. The overall payroll numbers were, I think, strong enough to allow the Fed to go ahead and tighten next month. But, of course, that's going to depend very heavily on next Tuesday and the outcome of the election. If there's an unexpected outcome and it impacts the financial markets in a very big way, that could stay the Fed's hand. Going back to the labor market, I think we're just seeing conditions continue to get tightened. Now, interestingly, though, the drop in the unemployment rate this month was more due to the fact that people, moved out of labor force or dropped out of labor force. It wasn't really necessarily in the household survey, which is 2 separate surveys, that we saw a huge employment gain in that household survey. But I think overall, when you look at where we are in terms of employment growth, the unemployment rate, and then the fact that wages moved up moderately higher, suggests that we have good dynamics in the labor market, and wages are going to start to pick up even further as we go forward.
Thank you, Kathy, for your insightful comments. I'm Jack Everett, and you've been watching the Weekly Wrap-Up. Be sure to check back on Monday for the week ahead. Goodbye.